Okay, let's get a move on and let's discuss what Crompton Greaves' earnings performance has been. Joining us right now, Shantanu Khosla, the MD at Crompton Greaves Consumer Electricals Limited. Shantanu, hi, good afternoon. Good to have you on the show. Firstly, walk us through how the quarterly performance has been, how the operational numbers are looking at a time when we've had to grapple with the second wave of the pandemic, although not in Q4.
Well, Q4 numbers which we released on Friday have been actually fantastic. Our total business was up 48%. It was very broad-based with every category, every geography, every channel growing. Our core ECD business was up 60%, fans 59%. Our key lighting B2C LED business was 41%. Also just to give a reference, because March base last year was obviously this thing. This is also good, strong quarter-on-quarter growth with our ECD business growing 15% over the previous quarter. Margins also came in strong in spite of the commodity pressures with our PAT at 249 crores, but there was a tax adjustment in that. So like to like, it was up 64%. So overall, quarter four was a very strong quarter. Now, of course, we moved to a much more challenging period with the second wave of COVID really having hit us in quarter one and in many ways halted the momentum. For all effective purposes through the whole of March, the entire market has been closed. The way to think about this is this year, April and May are really very similar in terms of market closure to last year, March and April. So obviously that is a challenge. But that being said, also it's, I think, important to mention that our focus on this period, like last year, has been on the health and safety of our employees, their families and stakeholders. And obviously infections this year have been higher, but we are really trying to organize and push free vaccines for everyone as vaccines become available and help in every way we can. The other challenge, which is new this year, which was not there last year, over and above the demand challenge, is obviously commodity prices. Commodity prices are at unprecedented high levels. In quarter four, commodity prices went up 12% over quarter three, and pricing, which we've been able to pass on, plus strong cost reduction has helped us retain margins. But this pressure is not easing off. And in April, May, we have actually seen commodities have grown 8% further. So we have to keep working this area with pricing, cost savings, and continuing premiumization. So all in all, a really wonderful fourth quarter, but definitely both from health, safety, and also from a business point of view, there are challenges moving forward.
Sure. Given that, the growth in ECD segment has been sustainable, but, clearly summer season, like you as well highlighted, is going to get impacted again. So do you think the growth in ECD numbers are sustainable, or are you likely to see a big hit in the next quarter?
Well, obviously, this immediate quarter, like I said, is very reminiscent of 1Q last year, and markets are basically closed. There is no electrical goods shop open in the country for all practical purposes. So obviously that makes a big difference. But again, from our learning from last year, as the cases come down, as hopefully vaccination expands and life begins to come back to normal and markets open up, the underlying demand will be there, exactly like we saw last year. And hopefully in the quarters ahead, we will see a rebound just like we saw last year. The one caveat to that is obviously this year, the impact has been much deeper and broader of COVID than it was last year. For example, it has significantly moved into rural India. So we have to watch and see how rural India recovers over time. But big cities, urban India, should, we believe, have a recovery similar to what it was last year, with strong underlying demand and growth coming back.
Right. So how is it that you'll manage to recoup the losses that you're bound to see because of the lockdown impact? Would there be a cut in production levels? What's going to be the impact on margins owing to the raw material cost price pressures, which you rightly said weren't prevalent during the same time last year, but now they're a niggling worry? How do you think you're going to balance out all these factors at play?
Well, we have consistently looked at three things to try and cover costs, especially commodity costs. The first is ongoing, continuing cost reduction, which is a very successful program we call Unnati, which we've been running for the last 4 or 5 years. And in fact, in Q4, under this program, we actually eliminated about 60 crores of cost. The second is continuing premiumization. And this has also been an ongoing strategy of ours, and it continues to work. For example, in Q4, while total fans grew 59%, our premium categories grew in excess of 70%. The third and final one is price increase, because with this level of commodity increase, you have to take price increase. We have taken already in Q4 2 rounds of price increase, an accumulated price increase of somewhere between 10 and 12%. But we will keep looking at that. Also, of course, with these kind of escalations, it's already 20% higher in terms of commodity costs than it was in Q3. You cannot recover it all in a quarter itself. So we do expect over time, as the demand comes back, as the programs continue to kick in, we will get our margins back also, but it won't happen immediately.
Okay, Shantanu also wanted to know your outlook, given that you've spoken a lot about these price rises, which are going to be inevitable at a time like this. What about the picture when it comes to the rural area? How is demand shaping up there? What has been the raw material price inflation impact there, the overall demand scenario in light of the second wave?
Well, right now it's extremely difficult to judge because, like I mentioned, the markets are closed. So there is no access, even if someone wants to buy a fan or a light. Pretty much in rural and all of urban India, more than 95% of all shops are closed. However, moving forward, we've seen that it is the stronger brands, and we saw this last year also, which have stronger go-to-market capabilities, which tend to relatively do better as the markets open up. But this will obviously pan out over the next couple of quarters as the markets open up. The best way we have to model this, frankly, is looking at the trends which happened last year. So obviously, like you rightly said, the commodity trend and the pricing trend was very different last year from what it is this year.
Okay, fair enough. So what's the outlook then for FY22? What is the message that you have for your shareholders in terms of what you're targeting and how you hope to strategize during this pandemic?
Well, during the immediate instance which we're going through this quarter, it's very clear. We focus on the health and safety of our people and stakeholders around us. We focus to drive cost out of the system. We make sure that we are continuing to invest, which we can because of our strong balance sheet, in the drivers of long-term growth. So we are continuing to invest in R&D. We're continuing to invest in technology. We're continuing to invest in people. This, we believe, will ensure that when the markets open up, we have a better vertical startup of the business. And the long-term potential of this business continues to be fantastic and really, really value accretive.
Thank you for sharing with us your outlook as well as giving us a sense as to how the raw material price inflation has impacted the company and where you see your overall earnings growth. That's CG Consumer for you, the management speaking with us about their growth outlook. Let's slip into a very quick break then right here on the show. Up in the green by about 33 points on the Nifty, more traction within the broader universe.